What a title, man, as far as being the 1%. How does that happen? How do people make money, and why do people do it all wrong? It is incredibly simple. It is so simple, just like anybody can freaking do it. And here, let me just take the screen here, and we'll show you. This is the S&P 500. This is the Simple & Poor's 500 biggest companies, and the answer to everything is really that people are scared of losing money. Why are people scared of losing money? Well, they follow. What is the old saying of, gosh, what was that chicken that was just crying wolf all the time saying, the sky is falling, the sky is Chicken Little? It was something like that. The sky is falling, the sky is falling. And then nobody believes them. Right? This could happen all throughout history where people say, hey, we had this last little pandemic where Rockefeller states, or at least one of his biggest quotes that I love from him, is he talks about every disaster is an opportunity. You guys remember not too long ago during the pandemic, everyone was flying to buy toilet paper, and then big places like Sam's and Costco, they were like, oh, we're not going to return anybody's toilet paper because people bought how much was it? They bought like 30 pallets of freaking paper to wipe your ass. And if they would have just invested that money during that time period, they would have had tens of thousands of dollars. Even back in the 50s, right around World War I-ish, II-ish, there was the whole nuclear scare. People went to go buy bunkers and MREs and stockpile water. Like even during, when computers weren't going to roll over from 1999 to 2000, people just spent a bunch of money on stuff. When what you should have done is just bought investments, bought assets. And most people believe, I could even go on further to that as far as back when, just a few years ago, when housing prices were just going through the roof. That's when everybody was, hey, I need to buy a house, I need to buy a house, I need to buy a house. But now that it's kind of topped and things have declined by 20, 30%, nobody wants to buy a house, right? It's really expensive to borrow money right now because interest rates are at 7%. That is crazy. However, prices are lower and they're going to continue to go up here. And my point is, look at the S&P 500 over the last 150 years. Every time we had something, here's the Great Depression, boom, things skyrocketed. Okay, here's 75. Here is the dot-com bubble. Then you've got the real estate crisis, boom. There's really never a better chance to buy versus right now as far as to accumulate assets, but you can have a little bit more timely manner towards it. Like some of the richest people I know have lost a crap ton of money, Like myself, I was on a podcast for motorcycles, and I was telling people that I lost $800,000 in crypto this last deal, and people were just, they blew their mind. And to me, it's just numbers on a screen. Yeah, have I made more than that? Yes. Would it have been nice to sell at the top? Yes. But I had an intuition that I need to just stand through it because I've got a better chance of losing more money if I pull out, lack of a better term, right? And it's all about risk, right? In everything in society, this is why I hate school, is for the sheer fact that they don't teach you financial literacy. They teach you how to go get a job and work for the man, and you can be very proficient at working for the man, but they don't teach you how to get ahead, right? I was a financial planner for many years, and disclaimer, I'm not anymore. After that whole mumbo jumbo, I was like, dude, this whole scenario is rigged. I went there to try to help people, and in return, it was just treating them like numbers on a screen. Granted, that's kind of what the whole social security number, we were never designed to be a number, but boom, we are. And the biggest thing that I see people is they're risk adverse. They don't want to be risky. They want to have safe money. And that's why during these times of crisis, everyone, I was in high school at the time when the real estate bubble happened, and people were losing their ass. They were losing their ass, and they were just sell, 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 sell. But if you look at a nice chart like this, what does this look like to you? It looks like a rocket launch is what it looks like. But yeah, this is over 100 years. So the whole point is, in order to get wealthy, you have to be risky. Yeah, there's this whole ideology of you got to be diverse. You got to be diverse because if one goes down, then you have something to back you up. It's not true. It is not true. In today's day and age, it is not true. Truth be told, is anybody that has any sort of wealth, they made it by going against the grain. They bet big, but they knew when to bet big. Okay, I've never met a rich person that hasn't lost money, but I have met poor people that haven't lost money. It's a funny correlation between all of that. It's a very, very silly correlation. And coming from a background of being a ex-financial advisor, like some of the things that we were taught to sell people is mutual funds. They've got high interest rates. It's a managed fund, not by the planner itself, but some company that is paying the financial planner, and you're missing out on massive gains. And then, hey, you're supposed to buy CDs because they're backed by the bank, but they're not going to keep up with inflation. They're low yielding. And, okay, then let's go with bonds, because when interest rates are high, bonds are going good. Okay, cool, right? But there's an inverse correlation. When the economy starts doing well, your bonds start going to shit. That's why a bunch of these banks have almost gone under. And it's planning not to win, is trying to play it safe, is really the reality with it. Yeah, that's not probably what some people like to hear. They want to hear how to get rich quick, which sometimes happens, but it's usually when somebody has the experience and they meet the opportunity. It's not just some dumbass that shows up and just puts a crap ton of money on Doge or Black that ends up getting ahead. No, it's when education meets an opportunity, right? I mean, I don't even know if this is a good analogy or not, but Bill Gates, one of the reasons as to why he got ahead of the game when it came to computers was he went to a school that had a computer. It was pretty much the only school in the country that had a computer, and he skipped school to go work on this. So then he became an expert in that field, and people wanted it, and then it kind of blew up from there. My point is, you have somebody that is educated, that meets an opportunity, is able to make something happen. Okay. And there's that point that you need to risk. You need to be risky. You can't be risk adverse. Yes. When you lose money, it sucks. Coming from somebody that, yes, when I've woken up and have lost $50,000, I'm like, my family could have really, really used that. Right. But it was an educational experience. I learned from it. It inspired me to be better, and inspired me to want to be more successful. And yes, there is a time and place for having your assets in a safer place. Like on my channel, I spend a lot of time teaching people, hey, it's okay to be risky with 10 to 25% of your portfolio, which is above average, where if you look at big corporations, they say only 1% or something, but you're not going to get rich from 1%, especially from the people that are in the lower class to middle class. Like, the taxes are eating us alive with 15 to 30%. Like, we can't really afford to be risk adverse and only be risky with 1%, right? But we need to have some of our safe money in order to feed our families and everything. So that's why I do have some portfolios and everything set up that I am in index funds that are low, and it's just kind of along for the ride. My point is trying to get a little bit of 8% in that stuff. But then I have a good portion of my money in crypto, like above average portion. I've got about 65% of my wealth in sheer cryptocurrency because that's home run. But there's a lot of research that's gone on with that stuff too. This is just a very vague overview as to why people lose. And it's because, A, they don't play the game right. They don't play the game right. You have to, at some point, you're going to be wrong and you're going to lose money, okay? But you've got to risk it, and you've got to know when to risk it. And I'm not telling you risking it on dumb assets like SafeMoon, the whole FTX when they were saying, hey, we're going to give you a 20% yield on this stuff. Like, I know a bunch of people that have lost millions of dollars doing that stupid shit, right? You got to have some conviction behind it. Yes, I'm cussing because I'm passionate about this stuff, right? And most people do it wrong. And this is why my channel is here, is to help you do it better than me and at a young age, okay? You need to start now. But again, you can't be risk adverse, okay? If I'm just going to fast forward without spending any more really time on that, I can open up a chart of Ethereum, right? Because this is currently what I'm trading. I kind of trade a lot on my channel as well, and people enjoy that stuff. And if you want to know truthfully what my trading volume is compared to what my assets are, is it's no more than 10%. That's the way I have it set up. I've got a whole training plan. I can help teach you guys. I can do lots. I got lots of stuff on the channel for that. But the overview of this is failure is inspiration to get it done right. And as somebody that came from nothing and has moved myself up to the middle class, yes, I've got, you'll see if you follow me, okay? I've lost lots of money. I've made lots of money. I've learned a lot for that, and experiences is best when it's not your own. Why should you have to go lose a crap ton of money to learn something that I can teach you quickly, okay? But the point is you can't be risk adverse. You got to know when to bet big. You need to know when to bet big. And I'm telling you right now, the housing market, all the stocks, pretty much all crypto right now is a time to be betting big, right? The economy has been tanked. And people talk about like, oh, it's even going to zero. It's even going to zero. Well, if you want to know the last Bitcoin that I bought Bitcoin at, I was dollar cost averaging in from 25 to 15. Okay, the average I had for that Bitcoin is about 19,000. And I was telling people way back when, and I still think it's a good asset. But right now, if I'm speaking anything of like what I'm preaching, is the biggest asset I owned in crypto right now is Ethereum. And I think Ethereum has the biggest advantages to help people become wealthy. That's with XRP. I'm a big fan of XRP. It's more centralized, blah, blah, blah. But I'm kind of spitting a lot at you guys when really the premise of the video was to say, hey, you can't just pedal along and put money in your 401k and think everything is going to be okay. You need to know when to bet big, and you got to bet big. If you lose, sweet, okay? If you go broke before 30, you got chances to making it up again. If you don't, like even the older people that come on my channel and they ask me, what should I do? I'm like, okay, well, you're in a scenario, maybe you don't put 25%, maybe you put 10% and you go risk the heck of it, okay? Because again, how many times do I have to look at this damn chart of the S&P? Okay, we're above 4,000, which is amazing. But here, let me pop this open back again. Look at that sucker. That thing is, that speaks to itself, right? And most of these people weren't born in 1927. So it's not that effing hard to say, hey, I'm going to bet big on some of this stuff and just hold it for effing ever, and then make money in dividends, make money in staking in crypto, make money in REITs for real estate investment trusts. When you do get something that hits huge, you take it out, you put it in something a little bit more tangible like a house, okay? Then you can do a 1031 exchange and buy a bigger house or buy more duplexes, do something. So you're building a bunch of asset stuff. It is asinine to me that people end up not doing this simple thing, but what they end up doing is they end up trying to buy a big ass house, a big car, or expensive car, right? Those are liabilities. They're willing to go big on that stuff, but they're not willing to go big on freaking simple stuff. Invest what you know. Invest what you know. If you're somebody that plays video games all the freaking time, invest in Sony and Microsoft. You'll do fine. If you're somebody that is on your cell phone all the freaking time, invest in Apple. You'll do fine. Okay, now that I've been effing going around for 15 minutes, let me go back to Ethereum and let me show you what I think is going on, because all this stuff is dictated by the economy. No matter what people say or what the chart says, as far as here's a golden cross, hey, we hit this massive resistance, it's looking really bullish, blah, blah, blah. It could look as bullish as hell, but if the feds show up and say, hey, we're raising interest rates by 2 basis points, everything's going to effing tank, right? And it could be looking bearish as hell, and they could say, hey, we're cutting rates by 1%, and then it's just going to go through the moon. Trading is a lagging indicator no matter what you look at it. You can't just focus just on this stuff. And anybody that tells you otherwise, they have not made good money and they don't know what they're talking about. I will literally sit here and say that. They don't know what they're talking about if they just focus on this stuff. You need to focus on what the economy is doing as well. I'm not saying you need to sit there and look at the news 24/7 and then it's going to react back and forth, but you got to look at what is going on in front of you. Are we getting more jobs? Okay. Is interest rates, are they being cut more? How is the housing market doing? Like, truthfully, this stuff is not doing that well, right? So going long on stuff is a little bit more risky than going short right now, just from a standpoint. You got to be betting that the economy is going to be trying to do better. All right. And here on Ethereum, if I'm opening it up, we've got a doji cross that's coming up here right here. If you followed me, I said that, hey, things were going to get close to 1900 and then we were going to get a pretty good pullback. But if we can close above 1900, I do think that crypto could be going good. And I do think that Bitcoin could hit 40,000, right? Do I feel like we've got more of a chance of Bitcoin hitting 40,000 than it hitting back to 20? Look at all my emails popping up here. Okay, here. Let me open up that. Okay, so I've got an ascending triangle sitting here. And yeah, I just have the volume up here. If I open up stochastics, if it'll pop open here. Yeah, fuck it. It's not. I could really bet that we're going up to that 40,000. And here, let me go back to see where the next level is that's holding. Boom. That's right in line with where we were about 2 years ago. Boom. You could totally see something like that happening as opposed to falling back down here and going to 25,000. I'm truthfully, guys, betting that this stuff goes up, but it's got to break. We've got to break above 36,000. And then for Ethereum has to close above 1900 for me for it potentially to get over to that $2,000 mark. If I'm looking at this live, okay, where is 2,000? 2,000 is right up here. Boom. There is some good resistance going on here. But if we do fall back below into that range, well, you could definitely see 1,700 coming here. But right now, I am all basing this stuff on what the heck we're trying to do because the buyers and sellers are fighting hardcore with this stuff. But overall, I hope you guys learned something and subscribe. I'm going to be doing some more live shows here, and I've got much more information to share with you guys. So till next time, I'm Johnny Crypto, here to help you guys make some money.